Hello, I'm Rashan Gidwani, the presenter for Pitch Media. Joining me today is a very special guest who's going to be discussing China's huge economic expansion with me. China's GDP currently stands at 18% of the global GDP, and their economy is set to take over the US by 2030. Also, their middle class is expected to double from 400 million people to 800 million people. Telling me more about this today is Edward Pai, Vice President of Intermediary Sales at UOB Asset Management. Without further ado, how are you today? Thank you so much for joining me.
Thank you for inviting me over.
So just like I said, it all comes down to money at the end of the day.
Correct.
And for foreign investors looking to invest into China, you're going to tell me more about the ChiNext market. Is this correct?
That's right.
Fantastic. Let's do an overview of it right away.
When we want to actually understand about the China's onshore market, it's actually covering both Shenzhen Stock Exchange. You have your Shanghai Stock Exchange as well, also the resale, the Beijing Stock Exchange. But both the Shenzhen Stock Exchange and the Shanghai Stock Exchange, they were actually launched in 1990. So it was actually a way of modernizing and expanding the economy. For Shenzhen Stock Exchange itself, right, it's actually based in one of the most modern cities in China. So what it has is it has smaller and emerging sector companies in it. And on Shenzhen Stock Exchange itself, they have two boards. One is the main Shenzhen board, as well as the other one is the ChiNext market, which is second board. And then the ChiNext market itself was actually inaugurated in October in 2009. They started out with about 28 firms, and they had, I think the market cap at the time was actually about 11 billion in renminbi. What it helps in the capital market is gives innovation and fast-growing enterprise company to actually raise the funds. Listing criteria is also actually less stringent compared to the main board, which is the Shenzhen main board. So that gives opportunity for all these innovation and fast-growing enterprises to basically get the fundings, drive the innovation. So if you look at ChiNext market today, they have over about 1,100 companies and great market cap at nearly 11 trillion in renminbi. So you can see how much it has grown over the years.
Let's talk about what your long-term outlook is for China's innovation sector.
I think the long-term outlook for China innovation sector is actually in line with the long-term structural opportunities in China itself. So there's basically two parts to the long-term structural opportunities. The interconnectedness between these two parts are basically integral in identifying these opportunities as well. So let's talk about China's 2035 growth ambitions. Right, so in order for them to have a modernized economy, basically digital economy, I think it's paramount for China to actually pursue, towards boosting their productivity and innovation as well. Now, China economy is definitely in a growth transition. If you see in the early 90s, manufacturing, low value chain kind of manufacturing, but today they are transiting a lot to AI, into technology. And of course, like as you mentioned, consumption is increasingly growing significantly, and it will actually increase as a part of the share of the economy. What we have seen in the recent May 20 was that China actually put forward something what we call a dual circulation. Now, their strategy is basically an economic policy which put great importance to tap on the potential of the huge domestic market that they have, 1.4 billion people. And then they want to actually use that domestic market to rely on indigenous innovation, where actually fuel growth. And also what we have seen, of course, in the geopolitical scenes, some of the external macro factors that's actually impacting China, right? What they want to actually do is they want to have less dependency on the foreign markets. But of course, they are not abolishing the dependency on the foreign market all in all. They still want to be supported by the export growth and have an expansion into the international market as well. China middle class, like what you mentioned, exactly, going to double from current 400 to 800 million in 2035. Now, there's of course the potential for rising consumption is substantial. However, for consumption to grow, productivity is definitely needed. Productivity growth needs to be derived from a sustainable income growth as well, right? So government today rely a lot on the technology and scientific discovery to play a role in solving a lot of the society's problem basically in China, right? So second, which I think is a very good emphasis that we need to make, is that China's 14th five-year plan. So what they do is that they emphasize the development on the sustainability growth and the quality life of their citizens. that actually contribute to the 2035 ambition goals that we're talking about. So you have your technological innovations, you have green energies, you have people's well-being. It's very important. These are the key areas that is very important. It's a great importance for the Chinese government as well. And these of the certain areas are actually poised to benefit from the policy tailwinds, basically. So the examples, some of the sectors: renewable energy, you have your 5G, 6G technologies, you have your AI, industry IoT, your biotech, and then your high-end equipment manufacturing. How ChiNext index can actually provide the value propositions that it can actually ride well on the China high growth development for the next 10 years. The index basically encompasses of a wide range of innovative and growth companies and sectors that stands in the direction of the economic policy. In a nutshell, right, the ChiNext index is right on the materialization of all these mega trends in China. So that actually provides an important avenue for implementing the national strategy for innovation as well. Yeah.
Brilliant. So how does the ChiNext index differ from the other tech indexes like the Hang Seng Tech and the Star 50?
I think we have seen a lot of news on the Hang Seng Tech, your Star 50, but I think there are differences to that, even though sometimes it almost sounds similar of what they're trying to do with the kind of sectors they have, but we can see a stark difference in them. Firstly is basically Hang Seng and Star 50. They are only launched recently, July 2020. They are quite new, but ChiNext itself, they actually started out in 2009, so it has a much longer track record as well. And the universe that the indexes actually represents are also largely different. For the ChiNext index, flagship index of the ChiNext market, I mentioned earlier, of the Shenzhen Stock Exchange. Star 50 is actually the index for Shanghai Stock Exchange, a star market. Hang Seng Tech is also different. It's the 30 largest technology company on the Hong Kong Stock Exchange. So the geographical areas that they represent is also actually different. The differences in the dominant sectors that the indexes actually focus on is also a major difference. So for ChiNext itself, what they actually focus on is, of course, on the growth and innovative companies, but it has a good diversification across different sectors in terms of your industrials, your healthcare, information tech, your consumer staples, and even financials. But for Star 50 index, it's actually mainly concentrated more on advanced tech, your semiconductors, your biomedicine, as well as your advanced equipment industries. Whereas for the Hang Seng Tech, it's a dominant sector where they actually focus a lot on the internet business, the likes of your fintech, your e-commerce, your cloud technology, and of course also on the consumer discretionary.
But there have been some policy tightenings. The
Correct.
government has been cramping down on big tech companies because of their monopolistic behavior. What can you tell me about that and how that affects an investor and their sentiment towards investing in the ChiNext index?
After years of letting tech companies, sector run rampant, I would say, with the motivation of key driver for economic growth, there were looser policy for these tech companies. That was actually on the rise for the past few decades that we have actually seen in the Chinese market, right? But what happened was that significantly in 2021, all these tech companies, the tech behemoths, they actually had a very tough year. That's because of the Chinese regulatory crackdown that we've actually mentioned. The Chinese authorities actually took aggressive steps to rein in the monopolistic behavior of this Chinese behemoth. What they did was they actually cracked down, and then they were feeling that the Chinese tech companies, big Chinese tech companies, gaining the market share, and the smaller tech companies couldn't innovate and grow, right? So that was actually basically what happened in 2021. But if you look at the beginning of 2022, I think it's a little bit different. The Chinese authorities are softening their tone, which is actually good for us because that actually sends some of the positive signals to the market. So one of the events that probably I will highlight on there was a symposium in May this year itself. There was actually held with the tech companies on the digital economy. I think Vice Premier Liu He, right? He actually encouraged these companies to actually play a vital role in the national economy agenda, in the sense to participate in the scientific and the technological innovation front, and they are also sending more signals of support for this initiative as well. And they are also supporting all these tech firms in terms of pursuing listing, both in the home and as well as abroad. In the long term, we see that it is actually strategic policies making room to achieve more sustainable growth for the tech sectors. So I think in that sense, for investor sentiments, I think this kind of new government rules are to be welcomed rather than to be dreaded, because it's for a sustainable growth in the near future.
Yeah, just like you said, China does have huge growth ambitions for 2035, and their population is set to increase. More consumers, more money. So it's a good time. Now, there's different types of investors, right? Some investors want to invest to maybe buy a car, some want to invest to take a vacation, some want to invest for retirement, buying a house. Some investors want to invest into an ETF. Some invest because of diversification. Some investors want to pick out a singular stock. Now, let's dive right in. More specifically, why should investors consider buying into an ETF that tracks the ChiNext index?
So, I think one thing is ChiNext index basically provide these two things, both diversification as well as opportunities exposure as of right? So in terms of the diversification, ChiNext index, being part of the Chinese onshore equity, right? It has lower correlation to the global equity and equity markets and also other asset class as well. So it offers investors with potential diversification opportunities. If you look at it, investors do not really differentiate, from the offshore Chinese equity, like the likes of your H shares or the US ADRs, right? And if you look at it, if you remember clearly, the tech crackdown in 2021, there is actually a stark reminder that the offshore markets, the offshore equity, Chinese equities are the one that affected by the regulatory crackdowns. Forced to delist from the US, of the ADRs as well. But when we look at the onshore China's equity, they are actually delivering positive returns. So you can see the correlation, right? Very low correlation. And in terms of the exposure, right? Although we do have to kind of acknowledge that there has been slowing in the China's economic growth over the past few years, but I think one thing is that the size of the economy, as you mentioned earlier in the introduction, right, is something that we cannot ignore. It is definitely, poised to take over US as the world largest by 2030. And of course, right now, today, it is actually at the growth transition. And within that, when we are in the growth transition, is created that long-term structural opportunities that I mentioned. In that way, ChiNext actually provide an exposure to these emerging megatrends, basically.
Fantastic. Thank you, Edward.
Yeah.
Talk again soon.
Thank you.